Hello, I'm Cindy Dehart, and I'm a local realtor here in the Salt Lake and Davis County, Utah. And if you've been hearing a lot of mixed messages about the housing market lately, you're not alone. Headlines tend to focus on short-term shifts, but real estate decisions are long-term and personal. So I want to start by stepping back and looking at what history actually can tell us about the housing cycles, and then bring that context home to Utah. Let's start with some historical context. When people worry about the market, they often assume downturns are frequent. In reality, over the last 50 years, we've only seen 6 meaningful price dips nationwide. What's important here isn't just the dips, it's what happened next. Every one of these dips was followed by a recovery, and over time, those home values continued to grow. In fact, if you were to pick almost any 7-year period on this chart, I could show you that the median home price ended higher than where it started. And in many cases, even a 5-year window tells the same story. When you look back at this graph, though, you'll notice something else. The ups and the downs have become much more dramatic over time. The swings are bigger, but so is the long-term growth. That distinction really matters when we talk about risk versus opportunity. Now, let's bring this closer to home. For Utah, our data goes back about 30 years, so we're looking at a slightly shorter timeline, but the pattern is still clear. Compared to the national average, Utah experienced fewer extreme highs and fewer extreme lows. Our peaks and valleys have historically been more moderate, which has helped support steadier equity growth over time. We, we saw consistent growth through the mid 2000s, with the peak around 2007. And as the country had a big dip during that time, we had a slight correction. From there, the market stayed relatively flat through about 2012 and then entered a very typical growth cycle, gradual increases year over year that carried us through 2020. And this is important because that pattern is very cyclical for our market, and it's a similar rhythm to what we're seeing today. What stands out most about this recent cycle is the rapid rise leading into 2022 was followed by a correction, not a crash. That correction reset pricing and demand, and that's where the recent data really becomes helpful. When we zoom in on the last few years, the pattern becomes even clearer. Since late 2022, we've returned to a more predictable rhythm. Growth in the spring and summer, small dips in the fourth quarter, and then growth again. The dips we saw in late 2024 and 2025 are significantly smaller than 2022, which tells us that much of that earlier movement was a course correction, not a sign of ongoing instability. If we step back and we assume a conservative 4% annual growth, starting in the mid 1990s, we would expect Utah home values today to be around 347,000 currently. And in reality, the median home value ended at 545,000. That reflects an annual average growth rate much closer to 5.5% year over year for 30 years. That doesn't mean every year is that strong, and it doesn't mean every neighborhood performs the same, but it does reinforce how powerful long-term ownership has been in our market. So what does that look like locally? Well, in 2025, Davis County single-family homes saw an overall growth rate of 3.6%. But this is where things get important, and that number varies widely by city and neighborhood. Some areas outperformed the average, while others were flatter or slightly down. And this is why county-wide headlines don't tell the full story. Even with variation city by city, Davis County has historically exceeded the long-term 4% growth curve. Even through 2025 itself was a more moderate year. That tells us the market is still doing what healthy markets do, moving forward. Salt Lake County covers a much larger geographic area, which makes it even more important to drill into the specifics. Overall, single-family homes saw about a 1.6% growth in 2025. That number reflects stability more than slowdown, but again, it makes a big difference between cities and neighborhoods. Once you start breaking down Salt Lake County city by city, the difference becomes much clearer. I often get questions about specific neighborhoods, so I've included 2 examples also in the data. These are the Avenues and Daybreak. And even within the same county, the experience of homeowners can look very different depending on location, housing type, and buyer demand. This is exactly why I always recommend looking at data through a much more local lens. So to wrap up this segment, let's look forward. National forecasts completed about 90 days ago project home price appreciation over the next 4 years anywhere from 4.9% on the conservative end to 15.3% in the middle, with the aggressive outlier closer to 25%. And before we go too far into the projections, it's helpful to pause and look at what actually happened here in Utah over the past year so that we have the Q2 and Q3 data. And when we break down 2025 by quarter, we see growth through the spring and the summer, followed by a very modest dip in the Q4, a pattern that's consistent with normal seasonality rather than broader slowdown. And with that context in mind, when we compare the national projections to what we've been seeing historically, the median prices 30 years ago started around 126,000 and reached over 600,000 in some areas. It's clear Utah has outperformed conservative expectations. Looking ahead, future performance will continue to be influenced by the interest rates, financing options, and demand, which I'll be covering in 2 follow-up videos. This big takeaway here is this: markets move, headlines change, but real estate decisions are personal and local. If you're thinking about buying or selling, or just want to understand what this means for you or a specific neighborhood, I'm always happy to walk through the data with you. No pressure, just clarity. If this raised questions for you, that's a great thing. Reach out anytime. I'd be happy to help.